Welcome to Opening Doors to Capital for Women Entrepreneurs. This session will begin soon.
Welcome to our next panel on our program, our track, Helping Women Entrepreneurs Soar. Our purpose today is to really identify the kinds of things that women entrepreneurs can begin to do in order to access the capital they need to sustain the scalability of their business and turn it into a really successful one. I'm Andy Simon. I'm a member of the WBC. Let me introduce Judith Goldcraft, our moderator today, and then she'll introduce all of our panels. If you've been following as an audience to all of these panels, they are building into crescendo. It is important to know what to do to build a business, how to begin to access the capital you need, and then how to find the right places to support you. Who is Judith? Welcome to our panel. Judith is a senior vice president with Wells Fargo Bank. She's a national women's segment leader for commercial banking. She has more than 25 years of experience in banking, including corporate finance, private banking, and business banking. She's a board member of the Women's Presidents Organization, WPO, and chair of the Foundation of the Women's President Organization. She's vice chair of the Board of Equal Rights Advocates and a board member for many organizations focused on women's leadership and entrepreneurship. You know, I could go on. Judith and I work together in many ways. She's a marvelous, marvelous woman. And I think you're going to have a fabulous time learning more about the kind of things that are going on and all the people who are shaking their heads and saying, Judith is quite a remarkable woman. Judith, I'm going to go behind the screen and smile the whole time. I'll be back at the end to sort of wrap us up. Please take over from here and enjoy the day. Bye-bye now.
Thank you, Andy, and welcome everybody to Opening Doors for Capital for Women Entrepreneurs. What a great way to end this fantastic summit. We have heard, if you've been in these last few sessions on entrepreneurship, we've heard a lot of statistics about the barriers to capital for women and the real limited capital that actually goes to women-owned and led businesses. But today we don't want to tell that victim's narrative. We want to change the narrative. It's time to tell a different story, a time to tell a story about success and the value of women entrepreneurs. Women entrepreneurs are incredibly valuable. They create jobs. They contribute an enormous amount to the economy, like $1.3 trillion to the economy. And they create companies that scale. And more importantly, they create companies that provide real, tangible returns to their investors. So let's think about what that really means. It's time for women entrepreneurs to step into their power and use capital to scale, to be bold, fearless, and brave, and actually find the people who are ready to listen, because that's where the change is going to come. There was a recently announced list of the 50 fastest growing women-owned and led companies by the Women Presidents Organization, a partner organization of Women Business Collaborative. And they found this year for the first time that almost 50% of the women on that list actually sought outside capital to help their companies achieve the kind of growth that they did. So we're starting to see the change. And there are other amazing examples of success that many of you know about: Bumble, Stacks, Spanx, and Modere. So today we have a tremendous opportunity to have a conversation with a rising star, Rosina Samadani of Oculogica, Catherine Swintek of Golden Seeds, and Alex Lebenthal of Houlihan Lokey. We're going to talk a little bit about the journey of an entrepreneur, but also the journey of capital during that entrepreneurship and the growth that comes along with it. I'm going to ask each of the three of you to actually introduce yourselves. I can read your bios, but that won't be nearly as interesting. So Rosina, if you can start us off.
Hi there, everybody. Thank you so much for having me. I'm Rosina Samadani. I am the CEO of Oculogica. I have been CEO since 2015. This is my fourth startup in the healthcare and technology intersection. Prior to being in startup companies, or really founding and leading startup companies, I was with McKinsey & Company for 7 years. And prior to that, I was completing my PhD in biomedical engineering. So I completed my degrees, went straight to McKinsey, spent 7 years in the healthcare practice, and then founded my first startup company in the healthcare technology space. Progressed since then, and this is my fourth startup that I'm now leading. So very nice to be here.
Fantastic, Rosina. You're quite a veteran and so much to add. And I know that you're learning every day. Catherine, talk to us.
Yes, good afternoon, everyone, and delighted to be here with my friends Rosina and Alex and you, Judith. And Rosina is a rock star. I have the pleasure of serving on the Oculogica board, which is her current startup that she mentioned. And I am delighted to be here today to talk about this important topic. I've been an early stage investor for the past 12 years and have built a portfolio of investments in over 35 companies, spanning healthcare, so devices and pharma, technology and digital media. I've been at Golden Seeds that entire time and also am a managing partner of Golden Seeds Fund 2, which is an asset manager investing in startups. Golden Seeds invests exclusively in women entrepreneurs, so that is relevant to today's discussion. My background is in corporate finance, investment banking, and debt structuring, and prior to that, international commercial banking and acquisition finance. I'm considered an expert in corporate governance. I've served on private, public, and nonprofit boards for over 20 years. And in 2020, I was awarded the Private Company Director of the Year by the National Association of Corporate Directors. I'm deeply committed to diversity, equity, and inclusion, and have been active in women's leadership organizations for several years, including C200, whose governing board I chaired. Thanks for the opportunity.
We have so much that we all can learn from you and so little time, but I'm looking forward to hearing your pearls. Alex.
Hi, thank you. I'm excited to be here today. So I am currently a senior advisor at Houlihan Lokey, and I run an initiative focused on working with women-led companies who are in need of investment banking and advisory services. We work with larger companies, but at the same time, it's really important for us to meet companies when they're in their earlier stages, because one of the things that I have found is that oftentimes women are not really paid attention to. They don't have the same network that male-led businesses do, and they all of a sudden get to the table, the negotiating table, and we're trying to learn things for the first time, and that can certainly be a big detriment in the confidence level that you feel. So I like to say we educate women with the information that they're going to need to know before they need to know it. I come to Houlihan into this role with a very different background. I ran a business that was originally founded by my grandmother and grandfather in 1925. It was a municipal bond firm called Lebenthal and Company. My grandmother worked until she was 92. So I grew up thinking that that's what women did. That's what grandmothers did. They ran companies on Wall Street. I ran that company for about a decade. I sold it. I stayed with our parent company for a few years. And then after being sold, once again, I restarted, and for 10 years, I had my own woman-owned broker-dealer active in debt and equity, capital markets, new issues. We were the #1 woman-owned firm for several years in a row, but I ultimately got to the point where I figured it was time for me to decide what I wanted to do with the rest of my life, and clearly I have found my passion. Outside of work, I am involved in C200 along with Catherine. I've been a member for 25 years, and I'm currently our New York City vice chair. And I am on the board of Graph Acquisition, SPAC. And then I'm also on the board of a female-led fintech startup called Enterprise Technologies, incredible female founder. And I find being on advisory boards is great because you really get to do something that's going to help that founder. So with that, I will turn it back to you, Judith.
Great. And Alex, I'm going to ask you, can you just get a tiny bit closer to your microphone? You're not as loud as some of the others. So thank you so much.
Is that better?
All right, great. Yeah, thank you. All right, well, we're going to have a great conversation. And as all the panelists know, we're really set up to have a conversation amongst the three of them. We'll have some questions, but a little bit different than some of the earlier panels. But Rosina, I'm going to ask you to start. You're on your 4th company. You've really been on a journey with this company as well as the other ones. So maybe talk a little bit about what does the entrepreneurial journey look like for you, what it has looked like, and what are some of the inflection points that you've noticed, especially as it relates to capital?
Yeah, and as Murphy's Law would have it, they're starting construction right when I'm supposed to be talking. So I apologize for that. So yeah, the journey is It's very interesting. It changes obviously as your company progresses. And I was thinking back, when, Judith, when you said, I want to hear about your, sort of like the fundraising journey as we went through it. We obviously started off with, a friends and family round, a series seed A. And that was actually before I joined the company. And it was literally 6 friends and family that our founder, who happens to be my sister, went out and cultivated, and they started the company. Where I came in was the Series Seed B, and that's where Golden Seeds came in. And it's where I met Catherine and a number of other women at Golden Seeds. And I have to say that meeting Golden Seeds completely changed the trajectory for our company. And it's not capital. Obviously, they supplied capital, but it's really more the education, the mentorship, and the guidance. One of the managing directors at Golden Seeds very early on, before they invested in us, laid out for me what the investment needs to look like from an investor's perspective and the exit in order for it to make sense for them to invest. And that is an eye-opening, very important, fundamental tool that every entrepreneur needs to understand. And when you're engaged with an angel group like Golden Seeds that is invested in women and is very interested in women founders, they understand that they need to educate women to understand that. And that piece of information has stayed with me throughout every fundraising step, because I need to look at it from my investor's standpoint. I need to look at this round from my investor standpoint and think about, okay, what is the exit that they need to achieve? Therefore, what is my valuation? How much can I raise? What do I need to achieve with this raise? It all basically falls out beautifully from that. Without an understanding of that, you really can't move forward. You have to look at the end game from the investor's standpoint and understand how much money you're going to need to get there, and what are the milestones that you have to achieve in order to get to that end game. So that Series Seed B was really an understanding of valuation. The convertible note that we went through next was an understanding of, okay, what does debt do to you? Debt can be expensive, but it can also be a very, sort of a critical bridge to, and it's often called a bridge to that next round, where when you can't get to the milestones, that you needed to get to with the previous round. And then I can talk about the Series A, which is a whole different story. But I felt, Judith, that maybe you have a question because you were about to say something.
Yeah, I mean, I think what really struck me that you said, Rosina, and I've heard both Catherine and Alex talk about it too, right? Like education up front, understand your exit before you even take capital. And I think that is a really important lesson that many women don't realize, that they have to be thinking about what the end game is right from the beginning. And so I'd love to hear, Catherine, Alex, some of your thoughts on this, and how you get involved, when you get involved. And the other thing is, like, how do you intertwine, or how do you help entrepreneurs think about intertwining their business plan with their capital and exit plan?
Yeah, I'll start on that, since we're primarily angel investors, which is the first, if you will, institutional capital. And as Rosina said, she had that terrific guidance, which hopefully any women entrepreneurs accessing external capital would have. But, rule of thumb in the angel market, angels on the first Series A, and sometimes it's called Series Seed, are looking for 10 times their money. And over what period? Between 7 and 10 years, earlier if they can get it, but 7 to 10 years, 10 times their investment. And so I know that that MD would have given Rosina that guidance. Do you see this company having an exit that for this particular tranche, this particular round of funding, will get them that 10 times. VCs who come in later, generally the third or fourth, sometimes fifth round of financing, but usually no later than the fifth, will be looking for less as a minimum, if you will. Of course, we're all looking for the 30 times, and we've had some of those exits, which is terrific. But they're going to be looking for a 5 times kind of number because their time horizon is a lot shorter. So we're all getting to that same, double-digit IRR. And Rosina also alluded to the milestones. This is something that we pay very close attention to. Our companies need to have adequate capital from any given round of financing to achieve milestones that are identified that will hopefully increase the value of the company so that on the next round of financing, they will be able to raise additional equity at a higher valuation and therefore mean less dilution to the existing shareholders.
I would add, women often tend to be more conservative. A lot of times I've spoken to women who say, well, our numbers are conservative. And I say, no, stop. That's not what a man would say. Appreciate why we do it. And so I think oftentimes it seems presumptuous to say, well, I'm going to IPO this, or I'm going to exit at, X amount, but it's really not at all. It's really about thinking through the steps that you're going to need to take, educating yourself with each one of those. And I will say that the women I talk to who are, it's interesting, they're so clear in what they're doing, at what stage they're going to need to do X in terms of their exit and their capital raising. And it's just so striking because you can tell that those are the ones that really have a much greater chance at having that big exit because they're doing everything along the way. It's not like the business is here, the capital is here. They're constantly thinking about it as, one being the function of the other. I will say also on the subject of being educated before, one of our bankers likes to say that if you want to sell your, consumer health and beauty company to Unilever, you don't want to meet me 6 months before. You want to meet me a few years before because I know whether it's Unilever or other strategics or private equity funds, what they want to see, how they want to see your business growth, but what, areas of your business that they're currently looking at. And so I can be helpful in crafting that strategy so that you will be ready when you're ready, when you want to sell to you. So, look, there are a million places you can get education today, right? You can get it from the internet, you can get it from organizations like this, you can get it from me and other people individually. There is no downside to knowing as much as possible.
Right. Great point. Great point.
So I hear what everybody is saying about the importance of education and having those early conversations. How do women entrepreneurs get your attention? Right? I know, Catherine, maybe you talk a little bit about the office hours that Golden Seeds hosts, and Alex, if I'm a woman entrepreneur early on and I want to start having these conversations, how do I get the attention of an organization like Houlihan Lokey?
So first of all, it's really twofold on our part. I like to go and find them. I'm every day see what women are raising money and, from what funds, and do I know them and do I have the ability to connect somehow? And I suspect there are probably more people starting to do that. They're doing it at later stages. And so, women should be aware that, there is sort of a knowledge of what's going on. Separately though, reach out. You'll get a sense if you reach out to an investment bank or you reach out to, some other advisor, and if that advisor sort of blows you off because you're too small at this point, or, whatever it may be, there are hundreds of other people you can go talk to. And I feel the same way with women investing their own money. If you do not feel like somebody appreciates what your value is, then go find someone else who will. And look, having a personal relationship with a banker or a lawyer or anybody that's going to be involved in your business, it is a personal relationship. There are a bunch of people who are really smart in their given field, but you want to have that person that is going to be truly that often overused word, but true word of trusted advisor.
Mm-hmm. And I would add that, there are many accelerators, incubators out there, Judith, that entrepreneurs can access. The other thing that Rosina has done exceedingly well is to raise the profile of Oculogica in the market. Among other things, we nominated Oculogica for an award by the Angel Capital Association. And there's hundreds of nominees, and Oculogica won that award. Rosina, was that in 2020 or 2019? 2019.
I think it was in 2018, and then we won another award in 2019 and another award in 2020. So like every year,
right.
And in 2020, it was Fast Company's most innovative companies in the world.
Right. So, raising your profile because somebody like an Oculogica is doing really important things. Does a woman entrepreneur, get our attention by being a trailblazer, which Oculogica is, by working on a problem that has a very large addressable market, by having subject matter expertise. Rosina, as she said, is a PhD in biomedical engineering. Her sister is a practicing neurosurgeon who invented the device. So extremely strong, credibility and subject matter expertise. So, it's a mix of things. But, companies that have that profile and company CEOs who have the profile that Rosina has will come to the attention of investors.
Yeah, and from an entrepreneur, go ahead.
If you think about, decade ago, it wasn't like you had to pay for your being out there. Today, if you're a consumer products company and you're on Instagram, and that's advertising, obviously, but it's a way to get yourself out there. LinkedIn, I think it took a lot of people a long time to figure out how beneficial LinkedIn could be for them. But, a thought leadership piece, post, few hashtags, and you can get in touch with an enormous number of people. So, think about your social media strategy. It's super important.
Mm-hmm. Yeah, from an entrepreneur's perspective, what Alex said about people reaching out to her, it's very interesting. I take every networking opportunity and every introduction that I can. And Catherine has introduced me to bankers, and I will never say no to that. And most bankers will want to talk with you because they're going to learn about the market. They're going to get very smart because you're more knowledgeable about the market than they are. You're right in the trenches. So if they're smart, they'll talk with you. And if they don't want to talk with you, that's really their loss. We're a leader in the market. You should be talking with us.
Right.
So one of the things that we hear from women entrepreneurs frequently, especially before they take on outside capital, is they're afraid to give up control. Can you talk a little bit about what does that look like? What does it look like to give up control from an equity perspective versus from an operational perspective also? Rosina, do you want to start?
I would say that giving up control, almost, I want to say no matter what percentage of your company you're selling in an equity round, you're giving up some control because it'll be the rare investor that will invest equity in an early stage company without what we call protective provisions in the business. And what investors are looking for is alignment. So, Rosina spoke earlier about an MD who gave her a roadmap and information about what investors are looking for. One thing investors are certainly looking for is an exit, preferably an exit again at 10 times or more if you're an angel, but they're looking for an exit. So if an entrepreneur does not want to ultimately sell her company, she should probably rethink whether or not she wants to be selling equity. There are other instruments, external capital instruments that are available depending on the creditworthiness of the company. And that's actually your arena, Judith. But, maybe a working capital facility makes sense to power growth depending on, what the company's business plan is. Sometimes, a modest term loan might get somebody, over a hump to a new growth path. But unless an entrepreneur is serious about a multi-year business plan with, high growth aspirations and an exit at the end of that, there may not be alignment, and then giving up control would be the wrong thing to do. But if there's alignment, giving up control gives that entrepreneur the capital that they need to make the pie much bigger and to, allow the company to thrive, solving whatever problem their product or service solves in the market, and ultimately making them, a lot, allowing the creation of significant wealth for them.
I mean, I would say that you can't be too scared of being diluted, because you need this capital. You need this capital to achieve the milestones, which is going to raise the entire level. Like, it'll be a rising waters type of thing. More equity in a lower valued company is not a good thing. That is not going to help you. You're going to have to find a different way to get those funds in to get that work done. And there are those ways. There are grants, but it's a much slower process. And so I would say, don't be afraid of taking equity in order to advance your company. If you've got a sharky, and we do encounter these very sharky investors, Catherine and I have talked about them, that those probably aren't the best partners for you. They're not looking for your success. They've got different incentives. So you really want to get into bed with people that you're completely aligned with. On the operational front, you want the best CEO for your company. And that CEO needs to know every single thing about the business, needs to know everything about the industry, needs to know where you're going, needs to have the plan, both financial and business. If from an operational perspective, an investor comes in and says, I've got a better CEO, or I've got a better management team, they want what's best for the company too. You'd have to listen to them. Those are just my thoughts on that.
Alex, I think I've heard you talk about the need to really rethink your financial management, your CFO, especially if you want to work towards an IPO. Do you want to tell us a little bit about that?
Yeah, I mean, look, when you're starting out, you're growing, it's not like you can bring on every single C-suite role. You don't have the money. Maybe you have somebody as a controller, maybe you're outsourcing your finance, but as you grow, and this is even as you take in additional capital before you're at the IPO level, you're going to want to have a more sophisticated finance department or unit or person. If one is thinking about an IPO, then it's really critical to think about the whole IPO readiness structure. Everything from your CFO to, do you have the right controls internally? What are you going to need to look like as a public company from a governance perspective, ESG, a bunch of other stuff. But you're going to want to have a CFO that has already gone through an IPO process and worked at a public company. And I always kind of chuckle. I saw one the other day when I see that a company has hired a CFO, and I Google it and look at the background, and I see that they did in fact worked on an IPO or in a public company. It's sort of a sure sign that that's definitely in the plans. But yeah, again, just thinking, it's very, very different being a public sorry, my camera just went, being a private company to being a public company, just entirely different situation. Business may be the same, but everything else is different.
Rosina, you've done this 4 times now. So I'm sure you've learned a lot over the period of these 4 different companies, and you've probably done it differently.
Yes.
So what are some of the key lessons that you've learned about capital, about thinking about creating value for your business that you wish you'd known earlier?
Well, always take a little bit more money because you're going to need it. And that's very tough at the time because you're worried about dilution and you're worried about valuation and you're thinking about all of this we're entrepreneurs, we're optimistic, we're born optimistic. But take a little bit more because it's going to take you a little bit longer. Something's going to happen like COVID. Pivot fast and smart. So when you see something, you've got to make the decision. And we have the advantage as small companies to be able to make a decision in a day. We don't need to, spend an enormous amount of time. We can be down the road 3 weeks ahead of a larger company because we were able to make that decision. And we did do that right at the beginning of COVID, for example. Be very honest and transparent with yourself. You can spin and you can try to, tell a great story and, you may even start believing it, but you've got to be honest with yourself about what's really happening in your company and your market and with your product. Because that's what's going to actually, get you forward. The other thing here, with our Series A especially, is that really understand the market and the situation, and persevere. Investors are not all going to be a great fit for you. You need to find the investor that is a great fit for you.
Can you talk about that a little bit? Because you've all mentioned the importance of the alignment of the investor with the company. So just from your different perspectives, how do you find that alignment? What are some of the important questions to ask?
You ask them what's their timing for an exit? What are their expectations for that exit? What does their portfolio look like? I always look to see if they've invested in other women, because if they haven't, I'm guessing that this conversation is probably not going to go anywhere because they've never talked to anybody like me before. And especially if they don't have any partners that are women, that's a little bit of a red flag because I just look so different to them that they're not going to be able to get their head around giving me money. There's philosophy and then there's business, right? That you have to be aligned on.
I think it's also important to do your homework in terms of the other founders that they've invested in. What was that experience like? I was actually talking with somebody the other day about a specific fund, and she said, I talked to another person who's had a not great experience, and other people have said XYZ. Well, you know what? Look, you need the money, and they're the only one. You're going to make that decision. But knowing that is incredibly important because chances are that your situation may end up mirroring that one as well.
And I think that would bring us to one of your earlier points, Alex, which is start early. So in the case that you mentioned with a consumer products company and a Unilever as a potential exit, or somebody who looks like Unilever, you don't talk to them 6 months before, don't talk to your banker 6 months before, have that information well in advance. And I think the same for capital sources. There are different players in size ranges and rounds of funding, who are in the market. And so getting to know those players, well in advance, either, staying in touch with them, letting them know what you're doing, forming a relationship so that, they're interested in knowing about your company. In the angel market, we counsel founders to start a minimum of 6 months before they absolutely need a first close, if not before. So start getting out there and having those meetings and making those presentations, because you know, it takes a while to get through all of the doors, but you also want to have choice, you know, choice about who you are going to accept into the capital of your company. And one question that's really a good one for entrepreneurs to ask investors is, how can you help me? So beyond the dollars, how can you help me? And part of that is going to be, what else have they done? You know, which other companies have they invested in? What is their track record? And who's in that firm? You know, whether it's another angel group or a VC, you know, who is leading those firms, and, you know, how can they help you? And, you know, I think asking that question kind of assures some alignment as well.
And we work with a lot of private equity funds, both the really large ones, but also a lot of middle market and lower middle market ones. So meeting them early on is important too. And they want to meet people. They are very aware of what is going on in the venture world and late stage venture. They have their eye on certain companies. So if they can meet them early and develop a relationship, that's important for them. And then I will also say that, you know, a lot of times founders, and it's happened a lot over the last few years, get a lot of calls, inbound calls from private equity or strategics. Hey, we want to buy your company. It's not the time to do your own brain surgery. Definitely find an advisor to help you through that process, to be your advocate, your consigliere, to get you more value, you know, whatever it may be. And then the last thing I'll say to just what Rosina said about women-led. Right now, I'll say in the private equity world, everyone is looking for a women-led company, but there are a handful. Yeah, it's amazing. And I mean, I talk to funds that have 10 male partners, and I say, okay, well, you know, well, look, but there are funds that have a proven track record of investing in women-led companies. There are ones that are totally dedicated to it. So I want women to, at least right now, have the confidence to know that everyone's looking for them.
And Alex, actually, with those private equity firms, they can start with their own portfolios and suggesting that, you know, that portfolio company adds some women in the C-suite. That's a good place to start.
And many of them are, which is great. And they're looking for operating partners and they're looking for board members as well. So they're getting there slowly, but getting there.
Great.
That's really good.
That's really optimistic.
Yeah.
I love that. One of the things I've noticed with women, and this kind of goes back to the earlier conversation about aligning the business plan and the capital plan, is that women, and probably men as well, they're getting to a point where they've raised some capital, but they're running out of money, right? But they're not ready to raise another round necessarily, or they feel pressed, right? I don't have time for more due diligence. I need a quick hit because I can't make a payroll or whatever it is. What kinds of recommendations do you have when women get into that situation where they've already, you know, taken on their whatever series, right? Maybe their angel round or whatever it is, but they're hitting a wall.
Yeah, that happens.
That's where your board comes in. I think, you know, if they already have taken outside capital, then through the protective provisions in a standard preferred stock offering, and through the board of the company, that's something that you raise an excellent point. There's milestones, and then there's what is your cash runway? And the company CEO and all of the people around the company in a fiduciary role, you know, do have to be laser focused on that, you know, and there are some examples in the early stage market where a company, you know, shot up to the stratosphere and then they forgot about, you know, the impending capital need. You know, one place to look obviously is your existing investors who have a vested interest in the company continuing in business and continuing to have an opportunity to realize their full potential. Rosina mentioned debt earlier, convertible notes, bridges. That's something that if a company does get into this situation, you know, you're going to be looking rather surgically at, okay, well, you know, what is the current burn rate. So how much are you spending in monthly expense? What is your cash? How long do you have? What can you cut, but while not sacrificing too much the growth on the other end? And so, find a bridge amount that gets you, to another place where you can reasonably raise another equity round. But this is where the CEO, whoever is in finance of the company, as well as board members, others in fiduciary roles, do have to be looking at this all the time.
Yeah, we watch it really carefully. And that's another reason that you need to make sure you're aligned with your current investors, because they're the first ones you're going to go back to. It's really tough to get new investors in a bridge round. That's an enormous amount of work. And usually new investors don't want to come in on a bridge round. It's going to be your current investors that are going to get you through that.
Yeah.
I want to say thank you so much. I don't think we even have time for the final pearls of wisdom that all of you have, but there's been so much learning in this very rich conversation today that I feel like I'm ready to sign up for round 2. So I'll look forward to that opportunity. And I want to thank you, Rosina, Catherine, Alex, for joining in this lively conversation. And Andy, thank you for making it happen, and to the Women Business Collaborative for putting this together.
And thank you, Judith and Catherine and Alex and Rosina, for an absolutely marvelous panel. I have a hunch you guys could keep talking, because I have a hunch the audience wants to keep learning. You all said something, a recurring theme: educate yourself, prepare. How do we capital and in your business plan? Like, they're not separate. And how do we make sure we know what our exit strategy is and where we're going? It doesn't sound that complicated. It's so complicated. And as Rosina was talking, if you've done this several times, does it get easier, or it just gets more knowledgeable and we begin to build on it?
There's
so for
always
our audience,
different situations.
and well, I mean, it becomes part of life, and it's who we are and how we're doing it. And I just loved it. I'm going to thank you and then tell the audience to wait a few moments. At 2 o'clock, we're coming on with Accelerating Change. It's the wrap up to our day together. And I've been listening to all the entrepreneur programs. I will tell you, they are rich, and I wish you could listen to each other because together you want to form a round table, all of whom is ready to help women of color, women who have great ideas and turn them into innovation. And Judith, you and I talk about this all the time. How do we help? So on that note, I think we're going to say goodbye, and I'm going to prepare for my wrap up and tell the audience, please come along and let me share what I've learned, and each of the other MCs as well. So thank you, and thank you for joining us today. Bye-bye now.
Great. Happy to be here.
Thank you.
Bye now.
Thank you for attending.
Excellent.